good evening, all. Ira Epstein, and here we are with your Spider ETF stock market report. Wild markets today. And this is Tuesday, the 18th of July, 2023. So, one of the things we keep watching is everybody keeps saying, oh, these earnings are going to come out. They're going to be terrible. Stocks are going to get hit. Haven't seen that so far, so I don't know yet where that's coming from. And I'm sure if it doesn't happen, and I don't know if it will or won't, it's very early in the earnings season. But if it doesn't, then we'll hear, well, it's the next quarter. I don't know that that's true either. I mean, it just seems that we have this Goldilocks environment where labor stays relatively strong. And when I say relatively, some weakening, but not crashing down. An economy that's firing on cylinders that are seeing inflation continue to fall, but still seeing an economy that is doing relatively fine. And that is all important. Now we're going to see that used car prices start coming down further. The inventories there go. Remember, housing's always a laggard because, number one, you're selling a very small amount of new homes or existing homes on a relative basis. Interest rates people are getting used to of a 7% type. So you've got to see all that. But when I look at the markets, we'll see what goes on. Notice how AMC stood out as one of the losers today, and that's bothersome given all these new movies that are out there, and why isn't that picking this up? If it doesn't, it's telling you a story. I only mention that so often because having owned the movie theater, I know how important this season is. A market that exploded today and came to life was Microsoft. Now, if we step back just a day, you were going sideways for the longest period of time. You began it by peaking out on June 16th. Remember, we're at July 18th, and just meandering back and forth in here. And all of a sudden, the market started coming alive. And today, the market explodes to the upside, as you can see. When we look at the swing line study, you can see how the market's got higher lows, higher highs. That's bullish, outside day up. So if you haven't taken my outside day course on our website, you might want to. The importance of today is extremely important. It's a breakout day. If it's taken out on Wednesday or Thursday, it would spell a big problem for the market. I'm not expecting it, but it would spell that problem. And while it would only say, maybe you go back to 338.80, still would be a loss of a lot of momentum. And I am looking at the market that has been going relatively sideways in the Bollinger Bands, if you'll notice. You can see how these bands have just been sitting here, and the market now reached over it. It got over it here, fell back under it immediately, and now it has taken off again. And this is a big breakout. Can it stay over it? Only time will tell, but the trend is clearly to the upside. Momentum is overbought, so I'd be a little bit cautious of wanting to buy over a band. Why? Because only 5% of the time, if you're buying over or under, does the market stay out of the band. Therefore, the market's liable to see itself stall here as the band catches up with price. This band trajectory will pick up from here, the way that the math works on it. In Rivian, market today was trying to come down early on and lose its embedded reading. It kept it. Until it's lost, it still has upside. The market, in fact, if it were to catch on fire with something, could be going back to this band. But one of my things that I've learned is when you get this type of pattern, higher high, lower low, and you're struggling to keep the embedded reading, you need the market to go every day to the upside. If not, there's a small problem. I say small because if you'll notice, the 18-day average of closes here in red is about to crisscross over the 200. The 100's all the way down here in green. So it's a crossover, not as important to me as when the 18 and the 100 cross each other, but it's still an important one. On UGA, the gasoline fund, higher lows, higher highs. Everything I'm seeing says that Russia is falling back into compliance of 500,000 barrels a day reduction in their supply, and that we have a leader in Saudi Arabia willing to shoulder 1 million barrels a day of less production and do it through August. It's hard to want to be short this market when you're going to have 1.5 million barrels less of supply. Now, Russia is beginning to also send oil back through the Arctic to cut down shipping time to China, But China doesn't need as much oil. If you've been reading their statistics as to what they're buying, it is sharply lower. And that's because their economy's in what we call a big HURT, the big hurt. In XLF, fully embedded reading, market keeps hitting the upper Bollinger Band and backing off. If you've taken my enhanced Bollinger Band course, there is a way to buy this market. You might want to be looking at it. If I look right through here, you're now about to get a crossover of where the 18-day average is going to go over the 200. See that? So suddenly the 200-day has lost its resistance point. It has flipped gears to becoming a support point when this happens. Very major change in the market. In XLI, fully embedded reading, until the red line closes under 79, buys in this market are still the place to be. NVIDIA, I have clients that are still doing, I think, rather well in it, up another $10 today. It's one of the core holdings I have in my morning subscriber video at this point, at least. And I told them today, I said, you know, if you look at the weekly chart, not the daily, the weekly just says keep holding it. You don't want to buy over Bollinger Bands. You are not having me tell you that on a daily chart when it's overbought. The weekly chart looks substantially different. SOX is getting pulled along with NVIDIA, as you can see, and up to the upper band, but an overbought market. XHB, the home builders. Well, everything I'm reading, and I don't know how to say it any clearer, every single thing that I'm reading just keeps saying that the housing demand is going to be strong. The developers, if the builders, if you will, they are playing the game of not building excess supply. It's on a first come, first serve. Give me your money. Let's go get the permits. We'll build you a house. And the good news is materials are falling in prices. That is helpful. Labor prices, I don't think they're falling for the home equity part of that. Not at all. When you look at the energy sector, you can see you lost the embedded reading and you're pulling back a little bit ever since you did. See that right through there? And that started that decline. Okay, but it doesn't mean it has to stay under the 18-day average. If you get that and close it, I'd get a bear signal. So if the market were to clear under, get under 80.92 and then close under 80.77, I could see a bear signal. But right now, what I'm seeing is a market that's in a correction phase, and tomorrow you probably lose this 70 reading in slow stochastics and be a little friendlier to the market. In all the metals, I was telling clients today that with the dollar falling, all I can continue to see is the market trying to lift itself. And each one, be it SLV, be it COPX, they're all doing the same. And the amazing thing is COPX should be getting hurt with how the Chinese economy has slowed down. And it's really doing a better job. Now, you'll know that this rally has run its course for the near term, in my opinion at least. If 38.89 is taken out, once that's done, I look for a fast move back to the 18-day average. You've already lost your upside momentum. You've got momentum starting to point down. BND, TLT, they're all looking bullish, but they're now testing key resistance, first the 200, then the 100-day average, and ultimately, if it can clear all that, the upper Bollinger Band. Trend up until you take out now 72.51. UUP, look at this big downtrend. And when you go to the euro, this is one of the biggest runs since 2004, straight up in the euro currency. People don't realize how important. I was on top of it and telling clients, you've got to consider a major top in the dollar. You saw me do it here in these. In fact, you saw me. Remember, I'm on vacation all week. I will be back next week. So you'll see me. I should be somewhat refreshed. I'm still putting these out for everybody. But I'm not sitting in front of a computer doing my normal work all day. I'm really having a very nice time. So that's how it works. Now, you might want to take a hard look at some of the offerings we have. And they're up here. For those of you that want education, if you click right here, you do see, here's my different courses. If you come over to free offers right over here, they will all pop up and you just select the ones that you want right through there, and then you come through here and everything works in this way, and it really makes it easy. You can go in, pick this one, pick that one, whatever the heck you want to do, and it just works with you. We'll get it and we'll get things out to you right away. I'm Ira Epstein. Thanks for watching, and I'll see you all tomorrow. Take care.